Hey folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Tuesday, July 28th, 2009. Well, we're seeing a little bit of a down day on Wall Street today, followed really by oil. Oil being the key catalyst to the downside. ExxonMobil losing. S&P's down about 7.5 points right now. Dow is down about 55 points. And the NASDAQ is down about 6 points. So it's just a minor down day. And what you are seeing right now is a buy program hitting the market as we speak. And you can see that right here. Monster move up here off the back of a little bit of a fake out to the downside. Now, what was this fake out to the downside? Well, it was a major little bit of a tips that we had the auction. You had the 2-year auction actually going off, and what we saw was initially it not such a good result off of that. You saw a little bit of a spike down off of that 2-year auction, and then ultimately a nice little tail closed near the top and a buy program hitting the market here. So you're seeing a little bit of propping coming in here. Not surprising in the light volume. Look at the volume today. Look at the down move in the market today. Look at the volume good until right around here. When does that coincide with? The market bottoming right here. The volume gets extremely light and the market starts to go up. Buy programs can hit. The market can be propped up in this way and kept really afloat from any major losses. And you're seeing that today. All right, you're seeing a solid down day on oil, a big down day on Exxon, a good sell on Goldman, but all in all, let's be honest, the market's holding up very, very well. To see the Dow down 50 points right now, 55 points, when you have Exxon getting crushed today like it is, take a look at Exxon. Nice drop on Exxon just off the 200, and by the way, notice the bounce right here off the 200 for a beautiful scalp intraday. Goldman Sachs getting pounded, although it is getting a little bit of a buy program right now with the markets. But look at Goldman Sachs. Down almost $4 on the day now, again, off the low slightly, and all of this combined, and you're still seeing the markets barely lower on the day. So that's just telling you that bid is in the market below. The optimism is there. The buy programs continue to hit because the light volume, as soon as light volume takes over, this market floats higher. And you're seeing that to a T right now on the SPY right here. Again, what we saw this morning is this. The market gapped down slightly today on some ugly earnings. Now, some of the earnings out there were not exactly great. They weren't horrible, but the real bottom line is, folks, and I've preached this to our premium subscribers in the Research Center, which I strongly encourage you join, is that these earnings and revenue numbers are really the problem. Revenue numbers are extremely ugly right now, and they continue to be that way. So the market's kind of ignoring them and saying, you know what, they're beating on earnings, so who cares? Let's go with the flow right now, and let's buy. And we've had one of our most, largest up moves in the market in the last 2 weeks in a short amount of time ever, in a long, long time. Now, the problem with that, again, is that eventually the market will stop being kind of naive and ignorant and start to realize that revenue numbers are declining, showing there's no growth. It's just pure cost cutting. That will eventually come back and haunt this market at some point. Whether or not it's starting today, I don't know. Why? Because, in general, the light volume, when you don't have participants in this market, the market will float higher. Whether it's a buy program by Goldman's trading desk, whether it's this or that, or the PPT, who really knows? Bottom line is, you have to understand that light volume dictates upside bias. So you can see today, the fall in the markets was beautiful early on, all the way to this trend line, beautiful trend line by the way, and then notice the volume, relatively decent volume. As soon as volume starts to get minuscule right down here, almost non-existent, the markets can float up, and that's exactly what we've seen day after day. For instance, look at yesterday. Yesterday, nice dump out early, and then volume starts to get light. Look at volume the rest of the day. What happens? Markets float up, buy program hits right into the close, the most obvious buy program I've almost ever seen right there. The markets get pumped right up, closed at the highs of the day, basically. If you go back another day, let's go back just a little bit more here, and you can see the same thing. Selling early on heavier volume, and then the market's floating up on light volume. Now, that's not a good trend. You generally don't want to see a market floating higher on light volume because it means that there's not a lot of participants behind it, and it's generally a fake move. So again, you have to be aware of that. Now, it doesn't mean that this market's going to roll down. I don't want you guys to take that away from this video at all. That's not what we're saying. Because again, as long as there's light volume, which probably will be through August until September, this market could very easily stay afloat and very well may do that. So please understand that. All right, folks? Please understand that. But again, what we saw today was a gap down on some not so pretty revenue numbers off of some earnings. You saw the markets gap and really start to push back all the way up to gap fill. Nice double top, triple top from the high yesterday here to the high here. And you can see the market rallied all the way up on a buy program hitting Exxon and oil. Oil started to surge. Exxon had a huge move. And then right at 10 o'clock, we got the consumer confidence numbers. Those consumer confidence numbers were not pretty, folks. Not pretty at all. The market ultimately sold off very, very hard on those. As you can see down, where did we go? See this pivot low from yesterday? Look at exactly where we went. What happens? We get a bounce. Where does it go? To the 50 moving average. Alright, so again, just notice how every key level from the day prior or 2 days prior is coming into play here. You have to understand that as a technical trendline analysis technician, you have to understand that you're going to put that to use and really use it to your advantage. And that's the beauty of this, folks. You can figure out every move. It's like having tomorrow's newspaper today. I can tell you what's going to happen based on the levels of the charts as they come into play. So again, knowing that you're going to have support here, call a bounce. Bounce comes, where are you going to go? To your 50 moving average, your first resistance. Market comes down, breaks down. Where do we go? We take out this little bit of a low right here. We go right to this yellow trend line, at which point you get a bounce. Market floats sideways, pulls back a little bit, and then a buy program hits on light volume later in the day. You're hitting resistance on the blue trend line and the 20 moving average. If that gets broken, you go right back to the 50 moving average and this peak right over here at around 97.75 to 90.80 level, right in that level, folks, all right? So again, key levels, but the bottom line is this, folks, is that the market, as long as light volume stays in this afternoon, you could easily see the market float up. If you get a little more volume, you may see the market roll over. Market remains extremely overbought near term, but again, markets can remain that way for long periods of time. You know, we've seen it. We've seen this up move now last over 2 weeks where it's just continually up, up, up. Spiders are up from their lows at 87. They've hit a high of 88 and change. So you're looking at 11+ point move on the SPY from peak to trough in a matter of two weeks. That's over 10% in the overall markets. Really an amazing move. Again, a lot of it short covering, a lot of it propping. There's a lot of different things coming into play here, but a lot of that has to do with it. Now, the consumer confidence number, somewhat of a small reality check, but you're not seeing the market moving down because there's no volume behind it. Bottom line, folks, if we were in a heavy volume situation, you could be looking at a market down 200-300 over the last couple days. Instead, you're basically looking at a flat market slightly to the negative side today, down about 50-60 points right now in the SPY. All right, so that's where we are. Take a look at Exxon again. Look at the sell-off in Exxon. Big. Here's the gap down. Here's the push that lifted the markets back to gap fill. Then the rollover, bounce, roll over to the 200. Know your levels. Know your 200 moving average is your buying opportunity for a scalp. Look at the move off of that 200. Easy as pie, folks. Again, join the chat room. Join the research center. I teach this stuff constantly. If you don't join, you're an idiot, in fact, frankly, and not to be rude or anything, but it's just so easy to learn this stuff. It's not even rocket science. You know, all these other people do, well, this calculation and, nonsense. Ignore the stochastics. Ignore the MACD. That's all nonsense to me. It's easy enough to just look at a chart and say, well, where did it pivot yesterday? Where's the trend line? Look at that. Oh, interesting. Overbought, oversold. What's looking here? Cycle stuff. Even cycle stuff is a little more complicated, but that's what we teach in the webinar coming up in early August. Giving the hardcore stuff, the counts on the signals, and so forth. But it's easy enough to look. Know your 200 moving average. Have confidence in that play. All right, Goldman Sachs. Take a look at Goldman. All right, beautiful move down here, cutting right through here. Look at the bounces off the 200. 1, 2, and then 3, and then finally breaks on the fourth one. Where do we come down to? Key trend line right down here as well. I don't have it in my chart. And then kind of a float lower. Look at the move right to the 20 moving average right now on Goldman Sachs. Oil. Let's take a look at the USO. USO is actually lower on the day. Look at this. All right, surge up early. We saw that with Exxon. Then the market drops, or the oil drops. What happens? 200 moving average right there. What happens? Bounce. Easy scalp play. Easy scalp play. And by the way, all this stuff translates onto your daily chart. So if I was looking at the daily on oil, here's your daily on oil. Let me go to the daily on oil. All right, easy as pie to analyze this chart. Same thing applies. Look at this, right up into the 200. What's happening today? You're getting a little bit of a pullback. All right, very easy to analyze this kind of stuff. Very easy to understand, and that's all you have to do. Just put the pieces of the puzzle together. Join the research center. Again, we go over so much stuff. Pro Trader Watch List gives you direction on stocks that we have and our traders have. Hot charts and alerts, key major moves in weekly, monthly, and daily charts for the long-term investors and swing traders. Nightly videos I do 30 to 40 minutes in length. Actually, yesterday was over 40 minutes long. Daily market reports with key levels on oil, gold, 10-year, and the S&P. You name it, folks. Again, that's the Hidden Gems report, which will be out next week for a new Hidden Gems on a small cap that could move, and I have some good leads on some possible players for there. A couple of over the last 3 or 4 months, we've had them run anywhere between 30 and 100% in a matter of a week or two. Really amazing stuff. Technical tactics are up there for learning, education, a ton of stuff. Again, $49.99 a month. What a steal of a deal. In any case, folks, keep an eye on this market. Let's go back to the SPY. Take a look. Another bounce coming through. Watch this 50 moving average in the afternoon. If you get through that, then you're watching your 98 level even number. And again, it wouldn't be surprising if there's no volume in this market for them to float this market up on, ridiculous buy programs. Take care.